We're here today to launch our first bi-monthly report for 2015, focusing on trends and transactions in all sectors of the Irish and Northern Ireland commercial property market during January and February. It has been a very busy first 2 months of the year, albeit transactional activity was somewhat subdued compared to the very strong Q4 experienced in all sectors. But there's been a huge underlying volume of work going on in all sectors, preparing assets and indeed loan portfolios for sale over the coming months, all of which augurs well for the market over the course of the next couple of months. In the investment sector, we've seen increasing appetite both from local and international investors in light of the very attractive returns that are achievable from Irish real estate at this point in the cycle, considering the current low interest rate and low inflation environment. We are clearly transferring from a market that was dominated by opportunistic investors to one where more core investors are now visible, with several new entrants coming into the market and a notable increase in appetite from German institutional funds over recent months. We've also seen increased appetite from the UK and the US in light of the weakening of the euro over recent months. Many of the large deals that have been completed in the investment sector since Christmas have comprised office transactions, with the most notable being the sale of the Project Tara portfolio on behalf of NAMA for close to 300 million in total. However, over the course of the next couple of months, we see the dynamic changing somewhat, with an increase in retail properties being brought to the market and sold. As predicted in our Outlook document earlier in the year, there has been an increase in secondary trading out of portfolios and assets purchased over the last 2 to 3 years. Many of these transactions are being done off-market. We also have noticed an increase in demand from investors for one-stage sales processes as opposed to the 2- and 3-stage processes which have been the norm in the market here for the last number of years. In the office sector, following a very strong record performance of 225,000 square metres of take-up in the year gone by, we have seen quite a bit of activity during January and February. Indeed, a number of notable lettings were agreed and signed during that period. One notable trend that we've seen in recent weeks is an increase in appetite from the public sector. We've also seen an increase from new types of occupiers such as pharmaceutical companies and aircraft leasing companies. There has been an increased focus on development, with several planning applications being lodged over recent weeks and months, and many more due to be lodging over the next while. At this particular point, there are 10 office schemes under construction in Dublin today, totalling about 80,000 square metres between them. Of that, about 1/3 of that accommodation has already been committed. We're seeing rents continuing to strengthen. Prime office rents in the CBD today are in the order of €4.84 per square metre or €45 per square foot. But we clearly see upward pressure on that, and indeed many of the deals in the market today are quoting rents between €47.50 and €50 per square foot. We expect to see this continued strengthening over the course of the next couple of months, with particular uplift being experienced in the suburbs and in particular the south suburbs of the city. It is inevitable that as the economy starts to improve and retailers get more confident, that we've seen an increase in activity in the retail sector over recent times. Most of that activity is evident in the prime shopping centres and main shopping streets. We've seen particular increase in appetite from coffee shops, restaurants and food operators. And many of the investors who bought retail assets over the last 12 months are really focusing attention now on asset management. An interesting trend over recent weeks in light of the exchange rate differential is that we're seeing an increasing number of Northern Ireland shoppers coming south and shopping in the Republic, and this has been a boon for many of the border towns. In the industrial sector, we had an absolute bumper Q4 with a record volume of activity, some of it influenced by the ending of the capital gains tax waiver on the 31st of December. And much of January and February has been focused on getting these deals closed. There hasn't been a lot of very notable transactions announced in this sector, but there is an underlying volume of activity going on. We would expect to see quite a few assets being released for sale, and indeed an increase in off-market transactions, both in terms of industrial land and industrial buildings, over the coming weeks and months. We particularly welcome Apple's decision in recent days to develop a bespoke data centre in rural County Galway. This will be a significant boost for that region and indeed for the entire country. The removal of the capital gains tax waiver last December had a very significant impact on the hotel and licence sector. To date, in 2015, the removal of it doesn't appear to have had any downward impact on activity in this sector, and there were a number of very significant hotel sales announced since Christmas. There's very strong demand for one asset that we're currently selling, Project Crystal, which includes 7 provincial hotels, guiding 35 million, and which recently went to first round bids. The latest performance figures from companies such as STR and Trending.ie show that occupancy rates and RevPAR increased year on year in every single sector in 2014. And there's no doubt that the current environment of low oil prices and indeed the weak euro will stimulate tourist activity and indeed hotel performance further over 2015. In the land sector, much of the focus over recent weeks has been on new central bank rules that were announced in relation to mortgage affordability. It remains to be seen what impact these will have on house prices, but it is something that developers have been very focused on. There haven't been a lot of notable land sales announced since Christmas, but there has been an underlying volume of activity in preparing assets for sale over the next while. The Northern Ireland market has had a very similar story, not a huge amount of activity being recorded in January and February, but a huge underlying volume of work going on in preparing assets for sale over the course of the coming months. There's also quite a bit of off-market activity in terms of secondary trading of assets purchased over the recent years, with a number of notable occupier and indeed investment transactions to be announced over the coming weeks and months. In the office sector in Northern Ireland, much of the focus right now is on refurbishment projects, and indeed we've seen a number of refurbishment projects commencing in Belfast since Christmas. And in the retail sector, there have been a number of new names and new announcements made in recent weeks. There will be more to follow over the course of the next couple of months. Overall, it has been a very busy January and February in the commercial property market in Ireland and indeed in Northern Ireland. While there hasn't been a huge amount of transactional activity recorded in some sectors of the market, this masks the underlying volume of activity in preparing assets and loans for sale over the course of the next couple of months. Quite a lot of secondary trading going on and a very, very busy season expected over the course of the next couple of months, all of which bodes well for the commercial property market and this sector during 2015.